Sweet.
All right, here we go. Ladies and gentlemen of the interwebs, welcome to the Beacon TV show. Can't even talk today. Let's do it again. Take two. Ladies and gentlemen of the interwebs, welcome to the Beacon TVL show, the weekly podcast from Beacon DeFi, your beacon in the world of decentralized finance. I'm your host, Professor Chris, the DeFi professor. We've got a great show lined up for you as we tackle the news of the week that's relevant to you, our dear users in the world of on-chain investing. Today on the show, we have back on panel one of our first rotating panelists right below me, whose very handsome face brings all the masses to our calls. Head of growth at our partners at Taoshi, BitTensor Subnet number 8, the proprietary trading network. Please welcome Luke back to the show. How's life been treating you, sir?
Thanks, Chris. Always a pleasure to be back. Doing well, man. It's a fun day in the market, so I'm excited to be here. Excited to chat as always. Looking forward to another good show.
Yeah, it's definitely we're definitely in October, right? We'll talk about that in just a minute. To my immediate right, also back on panel, I'm thankful this man isn't in Asia right now with everyone else, because this guy's one of the best minds of the business. We have Director of Sales at Canadian CX Netcoins. We have Mike back on panel. Welcome, Mike. How are you, sir?
Thanks. Appreciate being back. Those are kind words. It's always a pleasure to be on the show.
Awesome. Well, today's October 1st, the beginning of Q4. We have a lot of things to dig into. This is what we call Uptober. If Rectember is a thing, Uptober is also a thing. And man, what a year it's been so far. It's kind of crazy to think that that the year has kind of been what it's been. It's been full of twists and turns. Honestly, different than what I thought it would be. Let's start with you, Mike. What are your thoughts so far coming into the start of October this year?
Thankful. Canadian Thanksgiving's in October, so you got to be thankful for October.
Exactly.
It's pretty much bang on point. I wonder if it's a self-fulfilling prophecy at this point, but it's always nice waking up to a couple percent gain over the overnight. So yeah, it's great. I mean, hopefully it just goes out for a long Q4. I've been following I've been looking at the charts of the monthly returns and Bitcoin and crypto, and yeah, from now until hopefully January, February, it's going to be a very exciting market.
How about you, Luke?
Yeah, I think for me, it's hard. I think that this is kind of the final leg. I had 130K or so kind of marked out a long time ago as the line in the sand. Admittedly, I was probably a little more bearish than I needed to be in the last couple months. But we'll see. I mean, we still haven't even broke through previous all-time highs. But I do think that if we're going to get another leg here, it would make sense where that might be it. But, there's so much at play over the next couple months. Obviously you have likely more rate cuts coming, which I think is probably more or less already priced in. You have all these other factors that, could play a big role. Obviously we have the government shutdown happening, which I didn't realize has historically been bullish for markets. I'm sure we'll talk more about that later too. But I'm interested to see. I think really the telltale sign will be, how Bitcoin reacts if and when we get to, that 125K mark. See what happens there.
That's a great point. I mean, a lot of people were really curious about what's going to happen if the government were to shut down, which it did do. They were unable to pass a resolution in the Senate because you need 60 votes in order to do that for the spending bill. So it got shut down 53-47, I think, was the final vote. And you couldn't tell the crypto market that because it seems like it's up only for risk assets right now. We also have token 2049, which we'll talk about in just a little bit as well. Yeah, I mean, if we talk about the U.S. government shutting down, interesting not catalysts, but the situation currently. There was roughly about 150,000 employees from the government already, quote unquote, resigned through advanced furloughs. So the official last date for all those people was yesterday. Some of them, they decided to get, further paychecks and stuff like that. But this is the first time since the government has shut down since 2018, the end of 2018 into 2019. And it was the longest ever, I believe, at 35 days. Yes, 35 days. So, regardless of how you feel about, the government and politics, this is a pretty significant event, especially if it goes on longer than 7 days. There's a lot of mudslinging, a lot of political infighting on this one, but according to Polymarket, we're looking at possibly eclipsing that based on what we're seeing here in terms of where people are banking their votes on Polymarket. This number was as high as 50%, I think, at one point sometime yesterday. I don't know if you can price this thing, guy. It's just one of those things. There's other things as well, and we'll talk about that when we get to, just trying to figure out what we think the next 100 days are going to look like. But so far, it doesn't seem to be bothering a whole lot of people, at least in this market. Mike, I'll start with you with regards to, the possibly a long-term shutdown of the government to do whatever they're going to do behind the scenes. Overall, it seems like people, at least in risk markets, are pretty bullish on this. What are your thoughts on that?
Yeah, it seems like it. I can't claim to understand or know why crypto would be affected by a US government shutdown. I mean, theoretically, it should be somewhat non-correlated, I guess, other than the fact that it's viewed as a risky asset. But I mean, it looks bullish. It seems like the market's not really responding. I always look at, what is M2 doing and what are sort of the general risky assets doing. And if they're up, crypto generally seems to follow. So that it seems like it's kind of following that same pattern here.
How about you, Luke?
I'll actually add some color on some data from the past. I actually brought some fun facts. So
excellent.
Few fun facts here. S&P has ended higher 1 year after a shutdown in 86% of cases. The S&P 500 posts an average gain of 13% 1 year after the shutdown ends. During the 35-day shutdown in 2018, the S&P rallied 11%. So historically, I mean, it would make sense that the market goes up. I guess, this would seem a bit more reactionary given the data that I'm sharing is, a lot longer of a time frame. So I'm wondering if this is a response to the shutdown and it's kind of that reaction. I would have thought that it would have maybe been a little more priced in, just given that it seemed like we had kind of an indication over the last couple of days that a shutdown was indeed coming. I guess to Mike's point, I truly don't really understand why it would, be bullish or not for a risk market. It's not something I personally dove into, but I mean, certainly not complaining, right?
And to your point, that probably isn't even being a factor into what's going on. But U.S. Treasuries and T-bills, is there some effect from the idea that this could be a long-term effect? I'm not completely sold on that either, but I will go into the next part of our discussion that I think has something to do with where the market's going, and it is good old Swift. Swift, the moving protocol, if we want to call it that. To me, this is probably, to me personally, just being fascinated with interoperability and how money moves across the world. I think this is probably the most interesting news that I've heard over the last week. And there's been a lot of interesting news. I don't know how I feel specifically about how this is going to work. Gary Cardone has a very interesting trolling tweet against XRP specifically about this, which made me chuckle. But what's interesting is that Swift is now testing or piloting a blockchain-based ledger with this, and I believe 30 other banks. This group right here, and I can certainly blow this up for anybody who cannot see this. But these are some of the largest banks in the world. Specifically seeing Bank of America, Citi, because I know the first thing that I thought, Luke, when I first saw all of this was, with the Genius Act passing, Bank of America CEO literally said in February, if stablecoins are legal, they're coming out with one. But we haven't quite seen a lot of movement on that. But with Swift here, they're now going to be testing a blockchain-based ledger. Here's the fun part. It's not going to be on XRP. It's going to be on Linea, which is Consensus's ZK, zero knowledge proof, EVM Validium layer 2 blockchain. Consensus, of course, is from Ethereum co-founder Joe Lubin, and friend of the show Declan Fox is head of ecosystem at Linea. And this is, in my opinion, a gigantic coup for them to get Swift to come in using Linea technology to test this out. This is, to me, this is just unbelievable. They were able to pull this off to get a lot of the ISO 222 tokens and just a lot of that traffic using blockchain tech in the background. I was shocked to see that Consensus was able to pull this off. Do you have any thoughts specifically about how this is going to possibly change the way blockchain is looked at overall? Because I was thinking with the Genius Act, everyone's going to come out with a stable coin. That may not be the case anymore now that this is a thing.
I think it kind of plays into some of the conversations we've had on past shows. Like
Right.
We keep talking about this idea of blockchain being more and more so legitimized through institutional adoption. And I think that this obviously points to it as well. To your kind of point about Consensus, I guess pulling this off, I'm not even really familiar with that blockchain at all. I would have expected, I guess for someone like Swift to do this, I would have expected a more prominent blockchain. So I guess, from what I understand too, it makes sense to me that like it is kind of a surprise that they did pull something like this off. But in general, then kind of similar to what I was saying, it's like, you're seeing adoption not only of like the bigger blockchains, you're seeing adoption across the entire crypto ecosystem of different technologies and protocols and things of that nature. So it's pretty cool to see.
Yeah, Mike, I'm a huge fan of interoperability. I've always been curious to see what's going to be the next, iteration of FedNow, with Swift and stuff like this. And clearly it's going to be blockchain based. I don't know if that means that we're Swifties now, just in a different type of Swift than we were expecting, but they're partnering with 30 specific global financial institutions, and they're going to be blending both APIs, and ISO 222 all in this little new web that they're weaving. Do you have any specific thoughts about just how important this could be moving forward with blockchain tech?
Yeah, I mean, the theme, it seems like this cycle, one of the large ones is, the meme forever was institutional adoption. Okay, now that's happened. And then now it's feeling more and more like there's the crossover between fiat and the crypto world. I know JP Morgan Chase specifically on that list, they've experimented with a few different systems. I think they did one with Chainlink and
that's still there, by the way.
Yeah, so they're experimenting with different networks and systems. So I'm curious what their end goal is here. Are they kind of just throwing spaghetti at the wall and seeing what works and trying to understand it? Because it seems like we have a mix of, like you said, Feds updating their system, there's stable coins through the Genius Act, there's banks making their own networks and trying to make stuff on chain. Then there's this, and then there's things like Onyx, which JP Morgan Chase made natively. So
right,
it seems like there's a lot of things happening all at once. I'm not really sure why there's so many different ones. Are these institutions just so large they can just do a bunch of R&D projects and see what works? It doesn't seem like they have an exactly clear direction out of all these things. That's what's starting to unearth for me with all these announcements.
Yeah, and to be fair, this is still a pilot program, so things can change. But to me, the fact that they've been working, hand in hand with Ripple for a while, and the fact that they didn't choose XRPL for this, to me is a really big deal. Because you mentioned, Luke, you don't know anything about Linea. Most people don't.
I don't know.
It's a layer 2. It's what we call Validium, meaning that anything that works on EVM will work specifically on Linea. If you have little alpha here, if you want to get a really decent MetaMask airdrop that's coming soon, go get some Linea token. There's an unlock on October 10th, I think, with a gigantic amount. So you may want to consider probably before then grabbing some, honestly. And that should be, they've already said that I believe that the MetaMask airdrop will be pretty decent for Linea holders. So there's your alpha for the day on that. There's more alpha coming, but specifically that's it's really interesting that Linea has pulled this off because frankly, they're even though they just had their TGE last week, even though they said they were doing that back in January when they were at DevCon back in Singapore last year at DevConnect. This is a really interesting move, and I wonder what do they have building, underneath, under the hood. Like, what is it about specifically with consensus and what they're building here? And granted, as a developer, I know that they have had fantastic infrastructure for blockchain for many years now. That's not under question at all. But interesting that Linea is the one that was able to grab this. Fun fact: Nansen, their new AI, Nansen AI in the Pocket, that's no longer a Telegram bot, an actual app, also runs on Linea. So clearly, from an infrastructure standpoint, Consensus is doing some good things to pull in a lot of big institutional partners. So definitely something to watch moving forward, because it wasn't Linea that I was expecting to see when I saw this message. But it's going to bring in a new benchmark specifically for, frankly, international banking, not necessarily the US. For international banking, this is huge. So this is something that we'll be watching with great interest, as Emperor Palpatine would say. Speaking of banks, there's a bank here that's listed. This is the French bank Société Générale with their Forge. They are partnering with Morpho to be the lending partner on chain for their EUR-CV and USD-CV stablecoins, which is again big news, mainly because Morpho is also the partner that Coinbase uses for USDC. Whenever you're doing loans on Coinbase.com, it uses Morpho in the background to power all of the collateral movement there. So this is more, again, just using blockchain rails specifically, probably to get better rates for most people at banks at this level. So there's a tweet that Coinbase put out yesterday saying that banks aren't good enough, and that if you use Coinbase, you can get 4.5%. And I responded with, that's not good enough either. We can do way better than that, and tagged Morpho and a couple others that are in there. So for those of you who are brand new to the program, I'm going to show you a little bit of what Morpho's rates currently look like, and why, while it's great to have it up at the traditional finance level, let me do this here. You can easily get 11 and 12% on single-sided stablecoin pools that have all of this exposure, just like what Societe Generale, or SG we'll call them, is going to have, where your collateral is being used internationally with multiple different strategies going on. So big news for them. Good for them. Mike, I don't know if you do a ton of stablecoin farming, but the fact that they're leaning on DeFi protocols for managing, all of their strategies from a blockchain perspective, good stuff, right?
It's very exciting. I got to join your course, and then I can learn how to get deep in there.
Oh goodness, I wasn't ready for the segue yet.
We'll see.
I appreciate that. I appreciate that. How about you, Luke? Again, more of this. I'm excited to see more things like in the BitTensor ecosystem kind of start moving this way as well. Especially once we get into the idea of using AI to find the best, stable coin rates and stuff like that, like some people are starting to kind of do.
I think we already kind of have a bit of that. I think that's SN10 Sturdy. I mean, I think they're still around. They were pretty.
Yep.
They're
a long-term EVM protocol.
Yeah, I mean, I think there's a ton of upside to that. I think if you can, find these sort of rates that are exceeding traditional banks, I mean, that seems attractive to me if you're a believer in crypto, right? Like you can get 5 to 6% APY, for example, versus, your average high yield savings account, which is probably 3 to 4. I mean, why not take it if you believe in crypto, right?
You want me to blow your mind?
I see a lot of nice percentages there on the right side that are a hell of a lot better. So
you want me to blow your mind?
Please do.
So one of our strategies is called the DeFi savings account. And whether you're Camino, whether you're at Euler on Arbitrum, this was 12% yesterday, but regardless, they're all algorithmically generated based on how demand is, right? So the idea that we can have single-sided stablecoin, again, no impermanent loss here, but now do them in a looping leveraged way with one click. That's a real rate, guys, on a stablecoin looping play. Let me blow this up for the people in the back who might need me to do that. These are absolutely real rates, guys. On something that's a coupon bond that'll expire on November 20th. You have up till then to make in excess of 200% with 8x leverage on stable coins.
Wow.
Seems anyway. Like a Ponzi. Is it a Ponzi?
No, it's not a Ponzi. No, but essentially when you are depositing into these pools with stablecoin collateral, it's being used, behind the scenes. It's being rehypothecated into the system, much like it happens with a bank, right? The difference is here in Web3, you are the bank. So you actually get the 6% or higher than what banks would normally get, making all that money off of you and giving you 0.025% for your savings account. We can do better than 4.5% Coinbase. Simple as that. Anyway, enough of that.
Coinbase has to keep the 200% though.
That's true. That's true. And it's all going towards hair care because everyone at Coinbase has to be bald. Simple as that. When did bald become the meta? It's just one of those days I'm like, bald is the meta now. And I'm just like, I mean, granted, I'm all bangs at this point, but it's, man, I love having hair. I'm not gonna lie. Hair is underrated in my opinion in this meta. Anyway, we'll go ahead and move on to the next piece of news. So I appreciate that Luke and Mike are here because there's a ton of people that are currently out in Asia right now for token 2049. Was it ever on the plan for either one of you to end up going to Singapore?
No, not for me. Our team briefly talked about it. But I mean, I don't know. Crypto events aren't like super, I guess, up our alley, just given like what our audience is through blockchain. Yeah. But I would love to go to some of these more things in the future. They seem awesome. The conferences I've done have been great. Obviously, Chris, you and I met at Permissionless. So
yeah, it's been a year since Salt Lake City.
Fun. I think at the end of the day, it's really just to get out and network, right? Which I'm sure people are having a blast doing in Singapore. So
yeah, they're doing networking with drinking. So unfortunately for me, the only club I go to these days is Costco. So for me, it's just a little bit out of my league. I see that there are a lot of very, very fun young people making the deals or talking to get the deals done after the conference. It's rare for me to actually see, deals made there on the floor. But it's a good way to at least get the right exposure. If you co-sponsor an event, it's a really great way to get your name out there. It's not cheap, that's for sure. Singapore is not at all a very cheap nation to go and spend any amount of time in. So, congrats to everybody who's out there. Mike, have you been to Singapore?
No, I haven't. It would be nice to check out at some point. Right now, there's not a huge business case for us from a Netcoin side because we mostly work with
that
US
makes
and Canada, but
sense.
I would love to get out there. And yeah, it seems like a fun place. I mean, it seems like it's really accepting of crypto and the ability to do a lot of different, not just crypto, but just finance in general. It's in tech. It seems like it's grown a lot in some of these areas like Dubai and Singapore. So it'd be interesting just to see what the energy's like in the city.
And it's the largest crypto event in the world. Then I think ETH Denver is second. But for overall crypto, it's definitely the largest. The overall biggest DeFi event is ETH Denver. That's at the end of February. But there's been a lot of things. We're now in day 2 of this, and it's actually technically the fourth week of a gigantic swing for a lot of people that I know that went to Taipei first, and then to Tokyo for Tokyo Blockchain Week, and then to Seoul for Korea Blockchain Week last week, and then now they're in Singapore for Token. Yeah, it's a definitely a grind gauntlet. Shout out to Jirachi, shout out to Keiko, who are all out there doing their thing right now. Along with multiple people that are in my circles. They're having a great time, and there's a lot of things that have been announced so far. The first is, and I don't think I have it here first, but we'll talk about it. Coinbase's Shan Agarwal was on a panel where they're saying that well, he said that they're expecting $1 trillion in stable coins on chain soon. Right now, the number is about 350 million, if I'm billion, if I'm not mistaken. And that it's kind of been hovering to that point. So the fact that we would jump up 3x, I don't know how soon that would be crazy. But they're calling stablecoins the killer app in crypto right now. We've been saying that for years, that stablecoins are the killer app of crypto. But the other part here, speaking of stablecoins, is that Donald Trump Jr. was on the keynote stage for day 2, and he mentioned that World Liberty Financial is bringing their stablecoin to the Aptos blockchain. It's currently on ETH mainnet. It's also on Binance Smart Chain, BNB chain, and then we now have it now on Aptos. They're also talking about having a debit card soon, a crypto debit card, which means, in my speak, they're becoming a neobank using RWAs, and this will be a very interesting move. Regardless of how you feel about politics, Mike, it's really interesting how the Trump brand has really just transcended into this industry. I don't like it. I'll be honest. I don't like it at all, because, there's no doubt that they're using their name and their power here to help pull a lot of pro-crypto and pro-crypto influence into the administration, right? You could have just said that from the beginning, because his Commerce Secretary, Howard Lutnick, is the chairman of Cantor Fitzgerald. They're a 5% holder in Tether. So, yeah, what are your thoughts about world leaders having crypto empires like this?
Yeah, I mean, it's mixed. Obviously, it's benefited the market a lot.
Sure.
The U.S. is the world leader in finance. When I saw Trump in Nashville, when he made the announcement on the strategic reserve,
Sure.
it was yeah, I was kind of expecting this to happen. I mean, he gave the green light for the. Did he give the green light for the ETFs? Or no, the ETFs were already out. But
it's waiting for his. He has his own Truth Social ETF. It's still in consideration.
Yeah, the original Bitcoin ETFs, I guess, came out before he was in office.
Yes.
But it sets the tone, and obviously a lot of the crypto businesses now are piling back in, and there's a lot more movement that can happen. But when it makes it very political, and Trump's a very polarizing person, and his family's involved, it's going to make a lot of people get really turned off from crypto, and they already were from FTX a couple of years ago.
Right.
So I think it does make it a less approachable area. People are already, the general population, they're already not as involved in finance as they should be in their personal finance. And then you add crypto, and a lot of these exchanges have gone down and people don't trust it. And then you add politics on top of it. It's not making the industry look better in a lot of ways. So that's a big downside from it. But the upside is at least the regulatory environment and the business community and the crypto community can grow. So yeah, it's interesting scenario to be in.
And we saw a lot of flexibility and oversight, I would say, Luke, right? Over the last year, specifically with regards to this, with even his pick, Paul Atkins, for chair of the SEC, saying that DeFi and the parts, the parts of DeFi are fundamental to the American spirit: life, liberty, and the pursuit of happiness, self-custody, that type of thing. What do you think about, just kind of piggybacking off of what Mike has said so far about this much influence into policy?
Yeah, it's like we've kind of talked about. It's tricky, right? Like,
right.
There's definitely some elements that feel like a little bit of a power grab, and there's some obvious influence there. Like, the other day I saw one. I think it was Eric Trump tweeted out, like, buy the dips, and of course it was at the bottom again. Which, like,
yeah,
I mean, thanks for the indicator, but it's like, it's interesting when when you have the first family being so involved in one of the world's newest and most powerful financial markets. But then again, like, obviously, the United States government holds a lot of power, and to be someone who's in this industry and believes in crypto so much, it's exciting to have that sort of power and that influence backing crypto. And I think obviously there's a lot of innovation to be had. I think, hopefully we're just starting to kind of break through what crypto can really be. I think there's a lot of BS in the space and a lot of cleansing that needs to be done. However, long term, I think, if we promote the United States as a ground of innovation for crypto, I think that can be really bullish long term, not only for crypto, but for the government and for our people, because, we can kind of, use that to fuel jobs, the economy, so many different sorts of things. So that's why it's tricky. And also too, obviously, like we touched about, like Trump is a very polarizing individual. Like, a lot of people, there's not a lot of people who walk the line in the middle, right? So it's tricky. Like if there was someone who was more, I guess, unifying, I think that we'd probably look at it differently. I think though it's probably a net positive long term, in terms of like, the general adoption and institutionalization of crypto. When you have the U.S. government backing something, it's probably gonna go well. Hopefully, long term, we'll see. But overall, I would say probably net positive, despite the obvious drawbacks associated with kind of the power grab and whatnot.
Yeah, we went from a tweet back in 2018 where he called Bitcoin, a huge scam, to him having, 100 million in ETH from NFTs before he got into his first presidency, to now being very much in it. Trump media literally having their own ETF with we talked about it 3 months ago. It's BTC ETH Sol Crow from crypto.com and XRP.
I think that's kind of representative though of like what crypto's been, right? Like in 2018,
Yeah.
I mean, what was the price of Ethereum? Probably a couple $100, like at the lows.
Yeah. Probably $31. Yeah.
Yeah, things have evolved so significantly over time. Like, I think that he probably was speaking exactly what he thought at the time, which was that it was a BS scam, and to now it's like, now maybe it's a much larger opportunity for the U.S. to kind of take hold of and innovate with. But we'll see obviously how things evolve over time. I remain cautiously optimistic. I think hopefully we're still in our infancy, right? That's still the hope. I'd like to think the three of us here are still early adopters.
Oh yeah, I think so. Just out of curiosity, Mike, with regards to how Canada has kind of led with their thoughts on crypto, they are home to the first ever staking Solana ETF. They're on the Toronto Exchange. So I guess from your perspective, how do you feel that that Canada has handled crypto? Do you think they should be more like the US and have a much deeper claw into the industry with Canadian, well, we can't call them Canadian based, but Canadian influence type of companies really into crypto?
Yeah, absolutely. We've been a leader in this space for a long time. This is more of what's really happened in Canada is more of a symptom of our overall economy. I think our regulation's been decent. It hasn't been great, but it's been pretty good. Our first actual on the books laws around crypto were in like 2014.
Right.
We had the first ETFs. We've had regulated platforms and some form of guidance on how to actually operate a crypto platform here, which came first. And it's the US and the Canadian regulators actually work fairly close together. Sometimes they actually test things here first before they come to the US, because it's a similarly structured market. It's just smaller. So the Ontario Securities Commission is the one that deals quite a bit with like the New York Fed and such. The thing that really happens here is the market's just not that big, and it moves slowly. So the regulation by nature moves slowly, and a lot of the innovators and a lot of the biggest things don't get incubated here. So BitTensor, I'm pretty sure was started in Vancouver, but it's more of a DeFi protocol. Vitalik from ETH, he was from Canada. A lot of the early exchanges were here. We just don't really have the facilitation from the government on other levels to be able to grow businesses to be really big here. So our stock market's actually quite old, so the tech industry in general here doesn't grow very much, which has been unfortunate. We only have really 2 tech companies out of the top 100 largest companies in the country, which one is obviously Shopify, and then the other one is basically just like it's a fund that buys smaller tech businesses. So we don't have like almost any unicorns for the most part that they get to $100 billion market cap. So we're a bit far behind there. So we'll see. But yeah, regulation's been okay. One thing that's weird nuance here: we're not allowed to sell USDT. We're not allowed to sell Tether. They almost banned USDC, which thankfully they didn't. So there's things that we definitely disagree with. And from my perspective, I think just the speed and adoption can be faster, because there's this phrase that we say here. We have brain drain. So the smartest, most successful, a lot of times go to other markets because they can grow bigger and grow faster, which is a bit unfortunate because we could have a lot of very large crypto and tech businesses. So is what it is.
I mean, CZ is from Vancouver as well. So
he's like one of the richest Canadians by far. Like,
I would say so.
Yeah.
I had no idea he was from Canada.
Yeah, he's from Vancouver.
Huh. Yep. He worked at a McDonald's like on one of the bar streets or popular areas. I think he went to UBC too. So yeah, there's another example. I mean, Binance never would have gotten to be Binance if it was grown here because it was so international. And but yeah, another example right there.
That's amazing. Before we continue talking about the the rest of the show, again, I wanted to say thanks to Mike Kitt here from NetCoins, and Luke, of course, from Taushi for joining us today. If you like what you're hearing, please show some support. Follow our panelists. We'll have their links specifically on Twitter if you want to follow them. Follow the companies they represent. They're fantastic minds, fantastic people. Today, just wanted to obviously talk about the mothership that we're here for, and that is Beacon DeFi, but Total Value Locked, which is our free group from Beacon DeFi. Learn from the best of the business. As Mike was saying, he needs to jump into our course to learn more about how to take advantage of these DeFi savings accounts that we were just talking about, where you can get in excess of 10% on your stable coins. Why keep them in a bank when you can be your own bank and do it yourself? You see all these. We'll talk about treasury companies in just a minute. Why get exposure through stocks and treasury companies when you can just go and buy the asset yourself? You want to learn how to do it? Come join us here. Absolutely free to join. If you want to join our mastermind, if you're a high net worth individual, be around the best in the world at this stuff, come join us. We also have our Beacon Challenge where you can earn your first dollar in DeFi within 48 hours. Join us, school.com/Beacon. Absolutely free to join. These gentlemen know the power of education in this space and how you need to stay on the not necessarily the bleeding edge, but be informed. And it's hard to do by yourself. So join a community, get that edge. Come join us here at Total Value Locked. Let me take this away. We'll move on to the next part, going back to what we're learning from Token 2049. Phantom is using open issuance by Bridge, and this is where the Stripe M&A strategy has paid off in spades, guys. It's no secret that Stripe really wanted to disrupt this space, and they've done it through getting Bridge and a whole bunch of other things. They are now doing stablecoins for other groups. This is Phantom Wallet, the main wallet by market cap for Solana. They now have a stablecoin that they're going to be using called Cash. There's a couple other projects named Cash on Solana that didn't work out well. That's not the same one. This is a little bit different. So what's interesting about Cash is that it is here's their website, and it's not very specific on what's going on. There's a Phantom one that's a little bit better specifically for what it has. But I'll tell you what's good about it is it is an open loop stablecoin. It's supposed to be platform neutral, 1-to-1 backed by US dollars. It's going to be launched on Solana first, naturally. There are multiple blockchains that Phantom supports, such as Sui, a couple EVM chains, and Bitcoin as well. There's deep on-chain liquidity for this because they're using Stripe. and they'll have tier 1 market maker support. So I'm assuming that Meteora, I'm assuming that Jupiter will be able to have tons of cash, quite literally. And there will be virtual cards and debit cards. If you have the Phantom mobile app, which I just fired up right before we came on, all you have to do is just open your app, and you can be on the waiting list specifically to try this out. It's no different than when we talked about MetaMask's MUSD. They partnered with Decentralized Issuer M0 in September for that. This is very similar. They're coming out here with Stripe. So this is pretty interesting news, because not only can you fund it for free and use your stable coins with cash for free, you can pay with Apple Pay, Google Pay, or anywhere Visa through Stripe is accepted. So, as you mentioned, Shopify, Mike, that this is very much in that same vein. You can fund your cash account via bank or other credit card. So this is, we're starting to see, as you mentioned, the transition from what was, mainly just kind of walled off to more fiat access for everyone. This is better than what Jupiter and what MetaMask are doing. This is actually big progress, in my opinion, thanks to the work that Stripe's been doing in the back end. So I'll start with you, Mike. This is borderless payments, man. Stablecoins. What PayPal tried to start with PYUSD nearly 2 years ago now is a reality here using Stripe.
Yeah, that's exciting. The thing I'm most interested in seeing specifically with Stripe and some of these, I call them last mile providers,
yes,
is making it a little easier to actually use your stable coins at the end of the transaction. So there's a lot of on ramps and off ramps that are, you can do crypto in bulk, but there's not a lot of places that accept it for you to use it. And having, Stripe Bridge and then having the stable coin and trying to loop that whole system together. So instead of having to go in and out of fiat, you're just doing crypto all the way through. So it seems like those pieces are starting to come together a little bit with this type of integration.
Yeah, Luke. So this is kind of like what MasterCard Move has been doing. They're accepting anywhere MasterCard's done, and then merchants get to keep the majority of the revenue that they originate. According to this with Stripe, businesses get to keep 100%, and it's available to be settled, I guess, either in cash token or USDC, depending on how they have that on the back end. So, yeah, this is actually really good specifically for businesses, because if this is neutral and open, this is the answer to USDC, USDT, even Tether's new USAT, which is a stablecoin for the American market.
Yeah, I mean, it's more real world integration with stablecoins and crypto, right? Like if we can, start bringing more of these on ramps, off ramps into the ecosystem, that's obviously great. So I think, you would think that with that 100% of net revenue, that's obviously going to generate more adoption by real world businesses, which is really cool.
And to your point, Mike, I can definitely see something like this being accepted. Let's say they partner with someone like Toast, Aloha, some of these big POS type of systems, as you mentioned, the last mile providers. This type of thing, this type of standard, just like Coinbase's X402 payment standard, which is now in Shopify as well. We're seeing a lot of really good things being built in the open, really to hopefully move this in the right direction. Yeah, I'm really bullish on this type of move. This is good stuff, and this was again announced during yesterday, I believe, at Token 2049. Luke, another group that we met when we met last year, and I can't believe it's just only been a year, brother.
It hasn't even been yet.
Yeah, I mean, we met them. They were not that far from you. They had the big old Captain America shield. We have Midnight. Started out as a layer 1 data aggregation, I believe, layer blockchain. They've kind of, not saying that they pivoted, but they're definitely doing more infrastructure. They're doing zero knowledge proofs. They've announced they've partnered with Google Cloud to provide enterprise grade zero knowledge proofs, security, and infrastructure. Good for them for this move. This is huge. This actually, Google's actually going to become more than one validator. They're going to have more than one validator node on their network. And this is going to be something that's going to really just power the next generation of startups. So I like this move. I don't know if you actually met Midnight, if you got to hold the Captain America shield, but I just thought I'd bring this up because we were right near each other.
No, I don't think I did. No, I never got to talk to them, unfortunately.
Yeah. But we need technology innovations like this, right, Mike? Anything that helps to do security, privacy, in the face of things like this, we need things like this to help with security, making sure people stay safe on the back end, right?
Yeah, and I look at this, it's less the innovation, it's more the adoption. That's
Right.
the slowest thing to happen in these open source kind of networks where everyone's distributed and adopting at their own pace. Sometimes a thing like zero knowledge proofs can be out for quite a long time, and people are trying to figure out how to integrate it. And it's nice to see when it slowly starts getting rolled out into all these different products, and then it becomes a standard. I remember even thinking back to SegWit with Bitcoin and seeing how long that adoption took. I was watching the ticker of how many transactions were going to SegWit after it got turned on, and it took almost a year and a half, 2 years before it got over 50%. It takes a long time, a lot longer than you'd expect.
Yeah. No, you're absolutely right. And there's always there is one Achilles heel with all of these, and it's the ability to break the validation. Right? For people who don't understand what zero knowledge proofs are, it's the idea that I can just say this is a brick of gold, and here's a zero knowledge proof, a mathematical equation that you can prove, and you're just going to accept that this is a brick of gold because I have a validated proof from my side. That's a zero knowledge proof. That is a trust model that is now being used. It originated from Ethereum, from the Ethereum Foundation, and there's been a lot of movement to try and get this to be the standard. 2 years ago at ETH Denver, we saw a lot of mathematicians, and also this year, data scientists and mathematicians trying to specifically work with these teams, because unfortunately the problem when it comes to something like this is that there's all kinds of different ideas on how to do this correctly, and that's kind of been the deadlock. Thankfully, through third-party provers, people like Succinct is a really good example of one, and other third-party provers that are available, they've kind of quieted down. So now we have specific ZKs that are out there. We have multiple protocols built on top of ZK technology, like Linea, like Abstract, like Katana, that are out there that use ZK proofs. So it'll be interesting to see where this goes. Hopefully that we don't have too many standards for zero knowledge proofs, but hopefully enough that where people can accept this is true, because there are some really good disruptions that happen with ZK knowledge, in my personal opinion, specifically just for making sure that authenticity stays authentic. We'll go ahead and move on. The one thing that's also been a narrative currently at Token 2049 is not only just the idea we've been talking about on-chain payments, but also the idea that now we're moving into the rise of institutional crypto. So they had a really good panel here with Hidden Road, who is partnered. They were purchased by Ripple, actually, and then CME Group, the Chicago Mercantile Exchange. They have futures, and multiple other people from different major institutions. So, with what we talked about with Swift, with the idea of blockchains like Canton Network, which we've talked about for years now, it's a layer one that places like Goldman Sachs and whatnot are testing out blockchain tech with controls. They have control of their narrative moving forward. As we're going to see a huge move into tokenization, right? RWAs are on the way, stablecoins based off of that, just commodities, period, that are going to be tokenized coming on chain. They're having these conversations now. So this is actually going to be a very interesting, I think, inflection point, Mike, with how we're going to see, crypto and DeFi and blockchain come together to provide the next chapter for how most of these fintech or even just brick and mortar institutions are going to treat crypto moving forward.
Yeah, or I mean, it could look like the tech is crypto behind the scenes, but they might not instinctually know that they're interacting with tech. It might be a layer or two removed. Personally, I'm excited on at least things that are digital on the real world asset space for institutions like this. I met a company that they're a pretty big Bitcoin provider in Brazil, or crypto exchange, and they've integrated real world assets, and you can now, just like you can with Robinhood in the US, you can access stocks, treasury bills, lot of different type of financial products all in one place. And we're very lucky to live in North America and we have good financial market access, but a lot of the world doesn't. And if you want to access, anything from Bitcoin to owning like an Apple stock, once you get this tech and some of these institutions involved, and then it's easier to access those markets, I personally think that's quite exciting. And you have the DeFi things, the DeFi yielding, you can get, 12%, 50%, 200% on your deposits. It starts to make the world look pretty interesting when everyone can have access to these tools.
Exactly. And Luke, I definitely wanted to loop this around to you. With you guys contributing to OX markets, this is a pretty interesting time for market access, for the way institutions are going to look at liquidity, for everyday people like you and me to be able to contribute to being a part of that process. Because crypto does, if you want to, you can say it democratizes access to a lot of these assets, a lot of these markets. So I just wanted to get your thoughts on where you think institutional crypto is going to possibly rise from this point.
Yeah, I think like you guys touched on, we've kind of talked a lot about tokenization. I can remember sometime recently, I believe it was Larry Fink who said like, we're going to tokenize everything.
Yes.
Which, makes sense because there's a lot of money in this industry that these big players want to get involved in. So I think we're going to continue to see that sort of adoption and that bringing of things on chain. I would like to obviously see decentralization too. I think, to some extent there's, some negativity maybe involved with too much institutionalization. I think there's a bit of beauty in crypto and the fact that it's, more of this grassroots type movement in a way where, anyone can kind of access it from anywhere. Obviously, with that really kind of being the whole ethos behind Bitcoin. So it's definitely a fine line to walk, right? But I think, to a point, it's definitely a really positive thing, continuing to legitimize crypto and tokenizing assets, et cetera, et cetera. So this has been a really encouraging last year or two in that sense, like adding those sorts of, elements of legitimacy too. So I remain excited for the future. I guess you kind of don't want, the thing you don't want to see though is too much regulation or institutionalization of crypto.
No, I agree. It's interesting because we're seeing institutions kind of load up, and then we have websites like cryptotreasuries.app, which is showing all of the new digital asset, the DATCOs, right? The treasury. My goodness, there's even more than there was 2 days ago, with all of these companies using these assets as their primary asset to go towards. I just saw one with this isn't completely updated, but there's one for Link, there's one for Doge, well, not Doge, Bonk, and there's a couple others. There's one for WorldCoin, which is Ocho Holdings, and we're seeing a lot of interesting moves. There's an AVAX DATCO now. We're seeing a lot of these movements specifically into digital asset treasuries. And this is kind of like a two-pronged approach, right? Because you can go the institutional route, or because I don't see institutions really going into this. I think they're doing their own thing based off all of the testing they've been doing for the past 3 years now, in some cases, and looking to see what might be the right path forward. But having conversations like they're having right now here in Singapore, I think we'll move the needle to a degree where now that we have on-chain payments, specifically coming on-chain, and they're coming first, and we're seeing a lot of good infrastructure really back that up. It's a really bullish time, in my opinion, for that. I'll end on this before I go to us talking about our Q4 thoughts. But Meteora has set their airdrop, their TGE, for October 23rd. For many of us in our group, this is going to be a very, very good airdrop for our group, specifically because we use Meteora for a lot of our liquidity provision and concentrated liquidity plays on Solana. Meteora has a lot in their war chest. They were the partner of Trump and his team for the Trump meme coin launch in January, along with MoonPay. So yeah, they're doing fine. They'll be fine. Don't worry. Don't worry about the TGE and the price going down. They're perfectly fine. But they're doing an interesting way to to get your tokens, they're using specifically an LP that you get an NFT for, and if you want to cash it out right away, you can certainly do that, or you can leave it in and earn fees as Meteora against, I think it's against USDC on Solana as it goes back and forth. So you can earn fees while you decide to decide if you're going to hold on to it or sell it right away. I can't tell you what the right thing to do is. Not financial advice. Do your own research. We'll talk about this as they get closer, to be honest. But the fact that after almost 18 months now, almost 2 years, we finally have a date for this is interesting. So I don't believe that either you gentlemen are using Meteora, but overall, what are your thoughts on airdrops?
I think they're a good way to incentivize engagement, right? I kind of have mixed feelings on them. I think, you have to really incentivize, a way to generate LTV. Like, how do you keep your customers around after the airdrop so that people aren't farming? I don't have all the answers to that either. This is something that we're kind of considering as well for 0x markets. But in general, like, it's a good way to at least get people in the door.
Yeah, exactly. And they've got a really strong community with their LP army. Shout out to the LP army for Meteora. They know their stuff. If there's a smart community out there, Meteora's LP army, very smart. Mike, what are your thoughts on airdrops?
Yeah, I'd echo what Luke said. It's a good incentivization mechanism, but it has to be done right. I don't know how to do it correctly, but I think Hyperliquid did an airdrop, right? And it seems like they did a very good job at it. So yeah, there's good ways to do it. So,
and that kind of bleeds into the whole Q4 thing that I wanted to talk here at the end about. And I'll talk about airdrops specifically in Q4, but I'll start with you, Mike. Just with everything that's going on, how do you see Q4 going? Like, obviously, we're not here to give financial advice, but your thoughts specifically on how the market's going to shape up. Any thoughts specifically on projects you're really bullish about, or just any concepts you're bullish about that everyone should kind of keep in mind as we enter or we go into the last part of the year and into Q1 2026?
Yeah, we talked about a lot. I think we covered a lot of the big ones. I mean, I look at Bitcoin primarily and watching the Bitcoin price and the ratio of dominance between Bitcoin and ETH. I think a lot of people, just from a trading perspective, are kind of waiting for that alt season. I think we saw the ratio between ETH and Bitcoin rally a bit there, or volley a bit. So I'm curious to watch to see if we get a little bit of euphoria kind of in the market going up and following kind of the end of the bull cycle here. And then if that does happen, I am actually really curious just to see, what's on the higher end of the risk curve that people are going to attach onto. A lot of the conversations this cycle has been institutional adoption. We're talking about stable coins and these sort of things. They're not really a hype related ICO NFT kind of boom like we've seen that have driven a lot of the other cycles. So I'm curious if we're going to have something like that kind of bubbles up and garners a lot of attention or not. I don't have the answer for that, but I'm curious to see if that does come around, and maybe you guys would have a better insight on that than I would.
What about you, Luke? What are your thoughts as you take the glare away from your shoulders there?
Yeah, it's getting hot in here with the sun. Yeah, I think really the thing for me is to kind of remain cautious. I think that people get lulled into this idea of 4-year cycles and it's all cut and dry. I don't think it's going to be that simple, especially with, we've talked about institutions getting involved, in general, just maturation of an ecosystem. I'm expecting, similar but different, right? So I think too, we see the same thing every time, right? The market gets really bullish, people get super excited, and then they lose sight of, at some point it's going to cool off. So the general principle I kind of try and apply is just, be cautious, pay yourself when relevant. If you're going to take a P&L screenshot, probably close the trade. Those sorts of things that we've all probably learned far too many times. So, but it's hard to forget, right? Like, your adrenaline's pumping, you got a big green number on your screen, like, you're excited. So that's kind of what I try and keep in mind. I think, admittedly, I probably tortured myself enough times to where I have a little bit of bear PTSD from it. So you just keep on chugging and just remain vigilant in the markets, and hopefully things work out. Don't round trip your bags.
I mean, practically, you said everything I was just about to say. I mean, that's probably the best thing I've heard all day. If you're about to post a screenshot, close the trade. That's actually very good advice. I forgot to mention earlier, I'm wearing a Linea hoodie. So the reason why I believe in something with ETH in the middle is because we've seen a meteoric rise of ETH this year. Frankly, we were talking about the beginning of the year, we thought Solana was going to outperform ETH, and it still might. That's the scariest part about it. It still might outperform ETH this cycle, mainly because ETH has been lagging, behind BTC for some time. I do think we see another pullback on BTC dominance, where BTC is going to lead the market a little bit longer, and then we'll see something happen. But to get to the rotation, to get into altcoin season, but Q4 for me, the next 90 or so days, there's going to be a lot of airdrops happening. We've got the Meteora airdrop, we've got the MetaMask airdrop, possibly Rabby, Rainbow Wallet is airdropping, OpenSea is airdropping. We're going to see a lot of new things happening, a lot of new money coming into the system, if you want to call it that, moving forward. So from a DeFi perspective, we're at such an interesting inflection point, guys. I look at it like an estuary. So an estuary is where freshwater and saltwater meet. There's all kinds of interesting ecology that happens in that space. In the last 2 weeks, if you would have told me that perp dexes would have been the biggest thing people are talking about right now, I would have said, okay, cool. Yeah, I guess Hyperliquid's going to be pretty great. It's not just Hyperliquid now, guys. The old school, which is GMX, Gains, DYDX, and Synthetics. Sorry, guys. Unless you can figure something out, you guys have been surpassed by Hyperliquid, Aster, Avantis, Lighter, Variational, Gravity, Orderly. They ate your lunch, guys. And people are starting to farm the absolute crap out of all of those platforms, because Astra's already said they're dropping 2% of the token supply for their second season airdrop. People are grinding Hyperliquid. They've been doing it for months because they're hoping for a season 2 airdrop. And then you've got multiple perp dexes coming along the way. And that's just from the perp dex standpoint. We saw the institutional moves. We're seeing all the stablecoin moves. It's crazy that we can farm 3-digit APYs on stablecoins right now, guys. 20% used to be the holy fucking grail. Remember that? Remember when 20% was like, oh my God, I can't believe that. I just showed you something that's literally 7 times that.
Nuts.
And it's nutsoid. There is not a better time to be in DeFi than right now, guys. People are talking about DeFi summer starting. It's been starting since last quarter. 2026 is going to be crazy because we just saw Plasma, a layer 1 blockchain from Bitfinex. It is a stablecoin only pool blockchain from Bitfinex. Like USDT is the center. It is, in my opinion, meant to vampire attack Tron to get all that USDT, which is like $60 billion of USDT, off of there and onto Plasma and the XPL token. We're going to see more of these stable coin chains coming soon. We've got ARC from Circle. We've got Tempo from Stripe. We have whatever the hell Google calls their thing. Google, I think is what it's called. Something like that. UGCL. I'm just trolling right now. But regardless, we're seeing a lot of movement. Obviously not financial advice. Do your own research. Farm stable coins. Accumulate altcoins. And 2026 is just going to be a beautiful, beautiful time for all of us. If you want to farm perp dexes, great. But perp dexes are going to overtake CEXs at some point. The writing is on the wall, guys. That's why CEXs like Coinbase, Binance, Bybit even have been pulling DeFi stuff from the blockchains that they represent up into the .coms, because dexes are going to be the future. DeFi is the future. And I'm just rambling now. So I want to thank our guests again today for being here. Fantastic episode. I knew it would be with these two fantastic minds. Again, Mike Kitt from Netcoins, Director of Sales. Thanks so much for being here, sir. Please tell the people where they can find you.
Netcoins.com, Canada, US. We work with everyone from someone that wants to buy $10 of their first crypto to institutional treasury adoption, money service businesses, you name it. And you can follow me on Twitter, Mike A. Kit. Simple as that.
Beautiful. And I want everyone to look at this beautiful face here beneath me. The face that launches all of the people. I don't know how he does it, but literally, I believe every single well-viewed live version of this show happens when Luke from Taushi is on this show. Brother, I don't know how you do it, but I want to thank you.
I'm kidding.
Please, if you bought the hell out of this. Thank you for being here. And again, tell us more about what Taushi is doing. Obviously, we can talk about OX markets as well. But yeah, you guys are busy.
Yeah, busy as always. Yeah, Taushi is really just the first decentralized. Well, maybe not the first, but we'd like to think of it as the best decentralized prop trading challenge based on the blockchain. Traditionally, prop trading firms, they are made for their traders to lose, and they profit on your registration fees. At Taushi, we're turning that model on its head, where we want to pay people out fairly for their performance through the blockchain and reward you for being good, as well as we want you to succeed. We don't want our traders to lose. That's not our model. And then obviously, we have this great PerpDex meta, which I think is interesting to be launching into. We started on this idea of 0x markets in the last couple of months, and then all of a sudden there's this flurry of PerpDexes that come out. So I guess we're kind of jumping right in with everybody else and looking forward to competing in an exciting hot market. So we are working on our own PerpDex, which really is focused on bringing global currency markets to the blockchain through synthetic asset pairs. We'll obviously also have crypto commodities, hopefully tokenized stocks, bonds, etc. in the future, but really big focus on the Forex market. So that is something that we have on the way. Hopefully we will be rolling out beta in late Q4. You can sign up on our website, just brief email capture. But yeah, that's what we're working on right now. Really stoked for 0x markets. I think it'll be another one of the blockchain-based dexes. Obviously, at Taushi, we kind of believe that the future of trading is decentralized, we like to say. So trying to build an entire decentralized trading ecosystem.
Yeah, and I didn't mention you guys in that conversation because you guys are still kind of, getting up to market for some of that stuff. But I do think once we have this rotation of Forex and commodities, Kartha and what you have OX markets is going to be at the center of that conversation. So yeah, really excited. Thanks for being here. Thanks for always the great analysis and takes that you both have. We'll be back next week, actually, with another great show. We've been doing this show every week on Wednesdays, roughly about 12 to 1 p.m. Eastern, since December of 2021. We're here to educate you guys on the news, things that are happening, get the takes from our fantastic panelists so that you can have confidence in what you're seeing out there here in this arena. Yeah, we got a free training, our community training called Beat the Banks. That's on Fridays, 3 p.m. Eastern. You can find me there this Friday. And we'll have another fantastic community training where you can learn more about decentralized finance and everything that goes along with it with blockchain investing. So join us then. Otherwise, we'll see you back here with another great great guest, which I'll have VDEX, another new PerpDex on the rise, as the guest featured next week. So we'll see you then. Thanks again, gentlemen, for being here. Stick around for a second as we say the outro. Beacons up, banks down. Take care, everybody. Have a great day.